Okay guys, welcome back again to a new video at Troubles Trade and FX. So today we're going to be talking about the topics that I mentioned before. So I'm going to say the topics and then we're going to dive into them slowly one by one. So we're going to be covering how to read market structure, how to determine the overall market direction and intraday direction, trends and trend lines, how to draw support resistances, how to do top-down analysis, how to take advantage of the higher time frames, and then lastly, higher time frames and lower time frames confirmations. So let's get started. So first, we're going to be covering how to read market structure. So what I mean when I say market structure is what are the three phases of the market. So the three phases of the market are as follows. So you have an uptrend where price creates a higher low. So you have a higher low, then you would have a higher high here, then you'd have another higher low, another higher high. So this is the first trend, which is an uptrend. So let's put this here. Uptrend. Okay. Then we would have consolidation phase. So this is when the price starts going through the same level over and over. So there won't be any higher highs, higher lows, or anything. It's just going to be going through the same process. So this is what we say consolidation. So this is there. Okay, and then the last phase of the market, which is a lower phase, a downtrend, I mean. So it's where price goes from higher places to lower places, essentially creating. So you'd have a lower high, my apologies. So price would have a lower high, then a lower high. Hold on. Okay, yeah. So we have a lower low here. Then after this lower low, we'll have this lower high, then another lower low. So let's get rid of this. So these are the three phases. So downtrend. So these are the three phases of the market. So uptrends where you have a higher low, a higher high, a higher low again, and a higher high. Consolidation is where the market just stays in the same position, that doesn't change, it just keeps going up and down, and it goes from left to right. And then you have a downtrend, which is the price comes from higher places to lower places to create a level and then keeps driving down. So I'll show you the examples right now in the charts. So let's go to the 30-minute. Let's reset. Okay, 30-minute. Okay, beautiful. So this, let's look for an uptrend. So this will be a good uptrend. So basically this is where the market is going up, creating a higher high, a higher low, a higher high, a higher low, and it's going through the same process again. Now a consolidation will look something like this, where the price is just going sideways. Then you have another one here. Price is just going sideways within this block. You can see a block here again. If we move back, you would see another. You'd see another one right here. So these are the two phases, and then the last phase, which is a downtrend. So let's do this. So downtrend, let's look for something clean and clear, so that explanation could be very simple. Okay, there. So downtrend would look something like this. So price drived from here, kept doing this. So this is a downtrend. So where the market goes from the high place to the low place, and on its way it's creating higher, lower highs, lower lows, lower highs again, lower lows, and the process keeps going, keeps continuing. So this is how to read market structure and the basics of the market. So this is the first thing you need to know as a trader before doing anything else. Okay, so now we will talk about the direction of the market during the overall direction and the intraday direction. So for that we need to go to the higher time frames. We set charts. So for that we need to look on a daily chart, a weekly, a monthly, but daily is a good place to start from. So let us mark this area, because this is an empty area that happened on December 18th. Okay, December 18th, from December 18th till today, till yesterday, January 22nd. We could see that the market is going from down places to higher places and being in the process. So we know we're in an uptrend. So take the trend line tool, we draw a trend line. So now we know that price is going from one place to the next. So we know it's going from the lower place to a higher place. So this is your overall direction of the market. This is on a daily time frame, so that means this is what the market has been doing over days. Then when we move to a lower time frames, so we move to a 1 hour time frame, we start seeing the line, the trend line, which is telling us the overall trend. Then we have the intraday trends, or like the trading sessions and their own trends. So for example, so we have this, we have an uptrend. Let's try this again. So we have an uptrend within an uptrend, and then we have a consolidation phase. Then we have our downtrend, which is within the uptrend of the higher time frames. But if you're trading a 1 hour or a 30-minute, you wouldn't worry too much about the daily, but you still need to have it in mind that the higher time frame is telling me that I need to be going up. But because I'm in a lower time frames, what trends tend to do is, like we said, go. So for an uptrend, we go from create a lower high, create a higher high, a lower high again, a new high. So what we're trying to do is take advantage of this move in a bigger move. So we know that the market is going up overall, but we know that during 1 hour time frame, the market went up, which is this move. Then it had this consolidation, which could be this. Then we have this lower move, which is this. And we want to take advantage of this, but for us to do that, we need to go on lower time frames to use it. So we come to lower time frames, we would sell this, and then we'll buy this. And this is essentially this part of the trend. So within the same one trend on a higher time frame, when you move to a lower time frames, you could break it down to 3 sections where you could take it to your advantage, and instead of trading it once, you could trade it multiple times. You could trade it multiple times during the day, which is something very good, and it's very advantageous. So let's look for something similar. So here again, see this is the where the empty space I mentioned before, and this has been, if you look on lower time frames, it makes a big difference when compared to a higher time frame where it's just a few candles here. Okay, so the same idea comes here again. Uptrend, take it, so the market is doing this, use the uptrend, use the downtrend, use the uptrend again. So phase 1, phase 2, and phase 3, which is these. So if you could take advantage of this during one trend on the higher time frame, then it's very good. You don't have to, you don't need to, it's just I'm explaining how to use higher time frames. Okay, so let's reset, let's clear this up. Okay, and then we have trends and trend lines. So we mentioned trends, which is the 3 phases of the market. The trend, so upper trend, where the market creates lower lows, higher highs, lower highs, higher highs, lower highs, and higher highs. Then we have consolidation phase, where market just going sideways in a range that we can use. Then we have a lower trend and a downtrend. So price will be making lower lows, lower highs, lower lows. So you have a lower high, lower low, lower high, lower low, lower high, and lower low. Okay. If you're a person that cannot visualize it, I was one when I first started. I cannot tell the trend direction because there's you see a lot of things and you just get confused. So you take this, you come here, you something called trend line. So you use the tool, draw it, then you see the overall direction. So how would you use it? So you go to the lowest point, you'll see that if price touched this line multiple times, 2 times at least to solve it, then you should be fine. So the first, the second, then here you have it the third time as a confirmation that the trend is still valid. Here, and then here again. And as long as we could possibly touch it again to keep moving up. So that's how you could determine trends and trend lines. You could use also in a downtrend. So let me find, okay, there. So a downtrend, trend line again. Let's fix this, there we go. So same idea. So price touched it once, came near it twice, again and again, but then price created this level, and then we had the consolidation phase and price switched its movement, went from a downtrend to an upper trend. So that's trends and trend lines. Now we will talk about support and resistance levels. So let's remove these. Let's go on the daily time frame. Reset chart. Okay. So support and resistance. So let me draw this. So we have this, and we're gonna have this. So support and resistance levels are basically levels where price reaches and potentially would inverse in. It's not necessarily it has to. It's not the record. It's not 100% solid idea. It's just the price reaches a certain point where it potentially has to bounce back into opposite direction. So what happens is this: so price would go from a lower place, move up, come down, and move up again. When price hits this resistance levels, there's a high probability that price will bounce back down, retest it to see if it's valid, and then move down towards the support. So this is this is the initial, my god. So this is the initial touch where the price came up, touched it, came down, and then came back again to retest to see if it's valid. Price has to see if a certain level in the market is valid to be called a support or resistance. If price respects a certain level, then you know that that level in the market is very strong and it's very valid, and price will keep respecting it on a longer period. When price respects that level and bounces off of it, it will essentially start going to the inverse direction, heading to a support level where price, when it will be met by force, so it respects that level also. So what would happen? So when price moves from higher, so price moves from these resistances coming down to supports, it will do the same. So it will bounce off, it will retest again, and then after that retest it will move back up. So it will be the same idea. So price will test the level, see, okay, I found some pushback, not where it was planning to go, and then we'll see if it will retest it again, most likely than not, to see if it's strong enough to hold it back again. So this is the support and resistance. So let me show you an example right now in the markets. Let's remove this. Okay, so we're on the daily time frame, right? Okay, let's draw our resistance level here. Let's draw our support level here. Now let's go to the 1H. So let me move this somewhere here. Okay, beautiful. So let's use this. So first touch. So this is our let me just label them. Resistance, and then let's have our support here. Okay, so beautiful. So we see the price came from below, came down to say that, okay, so we have a resistance right here. That's the first thing we need to do and worry about. Okay, the price what initially bounced off, went to the resistance over here. It had the first test, rejected, came back down. Then price initially did what I mentioned, came down and came back up to test it again. Test again, rejection, and then went down to the support where it find previous support here to say, okay, this is an area where I might bounce off again if I come down, which price did. So came down, bounced off again, and went back to the resistance level once more. When it came back, you see, so we already hit the resistance level one time, two times, and then now we're in the third time here in the resistance level. So when you see, even with even if price hits the resistance level or support level twice, you would know that it's a strong level in the market, and it will potentially bounce off and go to the opposite direction, which it did here. It bent, price went down, and then went back up again, tried to break, failed, and failed again. So when you have these confirmations that tell you that, okay, this level is very strong, and I have to be worried that if I take a buy at any certain point and price is heading near this level, that the market would bounce off to the opposite direction, opposite of where I am. So that will cause you, so that's something you need to have in mind, to be like, okay, if I take buys here, so let me switch the color to yellow. So if I take buys here and my target is somewhere, let's say here, the first thing that you need to have in mind is that, okay, I have this is a level where price bounced off, and I need to make sure that when price comes here, it's either I close half of my position or secure profits, or just close the whole position here, because you know that it's going to be a strong level and the price will potentially move back down. These are things that you always need to have in mind when you're looking at support and resistance levels. Okay, so let me clear some of this and then let's do this, and then I'm going to talk about something else. So we have so we have this, then we had this. Okay, so now let's talk about the intraday support and resistance level. So this is the highest and this is the lowest support that the market can have at this point. Then we'll have something like this, and we'll have something like this. So these are levels on the 1H that you could trade on the 30-minute, the 15-minute, you see? So same idea, same principles. Price, let's go back to green. Price came one time, second time rejected it, got rejected again, then it found the resistance and got rejected. Although it was from before, but this time it came lower. So potentially, if you're trading lower time frames, you could use these smaller support and resistances to your advantage to take trades, which is something very advantageous. And I think that sums up support and resistance for now. There's nothing more I could talk about other than this. So now we'll talk about top-down analysis. Okay, let's remove the drawings and let's reset the charts and go to the daily time frame. Okay, so we determined before that we have overall trends and then intraday trends, right? So let's do that one more time, and then we're gonna combine that with a top-down analysis with everything else we learned. So first thing, overall trend, we said it's a bullish trend, so the market is going up. Beautiful. So that's the first thing we need to do. Then we use our support resistance levels to determine this. Okay, this is my resistance, and then this is my support. Then we go down to the 4H, and then you start correcting your areas. Okay, so we have this. So that's where the resistance is at. Then you move down again to the 1H or whichever time frame you trade, and then you see these lines. Okay, so this is my main trend of the market. Then you have your support and your resistance, and then you'll be like, okay, that means that there must be another phase in the market where I could trade the higher high and the higher low, which is exactly this. So you have the intraday trend, another one here, and then you have this. You have the pullback or the pushback or the correction, whichever you want to call it. And in this you had this support level. You had the support level that was created. So you see, you could use the higher time frames and lower time frames to your advantage, because this is what top-down analysis means. You would go from the higher time frame, from the daily, all the way to the 1 hour, and start drawing the same ideas, trend lines, support resistances, and seeing how market is acting in that specific time frame, in that specific session that you're going to be on, looking at the charts, and you're going to be trading. So with that, you can see the first phase, the uptrend, the consolidation phase, or you can call it uptrend also, but for me I wouldn't trade this because it's garbage. There's no good trades there. And then you have this, you have the downtrend. So these are the phases that will keep repeating themselves again and again. Another one here. So let me go make it better. So you would want to trade this. you want to trade this. This you want to leave, and then you have this. Same idea here again. And you just keep going and going and going, because that's how you would see how price acts, how price behaves. Okay, so now we talked about support resistance, top down analysis. Okay, now we will move on how to take advantage of the higher time frames. Well, I already mentioned it, but we'll go over it one more time, and then we'll move on to higher time frames and lower time frames confirmations. So we said on the higher time frame, trend is bullish. We have our support and resistance levels. Here and here. So this is your 4H and the daily. This is what these two time frames would tell you. The bigger picture, and then you would want to take advantage of this. You'd be like, okay, if I know that on the daily we're going up, and on the 4H that I have a resistance at 142 230, then a support at 140 300, that means in this range, let's just so you know it's a big range, it's 187 pip range. So that means in this range you could at least get, even if you get 20 pips, 30 pips, it's good enough. You could use that to your advantage. So you'd be like, okay, now that on higher time frames there's a big range and the trend is bullish, that means I could use the lower time frames to my advantage to take trades in opposite directions. And this, so what I'm going to be covering now is how to take advantage of higher time frames and lower time frames confirmations. So I'm going to put in both topics into one section because they go hand in hand. So when you look at this, you see like, okay, I have this, and I have that. I have the trend line, the support and resistance, which is basically all you need. You don't need no Fibonacci's, no Elliott waves, you don't need anything else. You just need price action and just basic confirmations, support, resistance, and that's it. So you have this done. Now it depends if you're trading on daily, the 4H, the 1H, the 30-minute, the 50-minute. It all depends on what type of trader you are and what are the confirmations you have in your trading plan. If you don't have one, I recommend you look up what a trading plan is and create one, because that's gonna help you a lot. So we have these. Now let's go to the 30-minute. On the 30-minute, let's come here for this example. So we have price pushing up, price pushes up, rejection here, price refuses to break above. Now price is moving back down, so we have this line. Okay, so price pushes back down. It depends on what type of confirmations you have. Excuse me guys, it's 5 o'clock and I'm making the recording super early. So we know that price is pushing up and then it's coming back down. So when we have this as a rejection, as price saying no, I don't want to go this way, I want to go the opposite. So what we need to do at this point is to start look where we could potentially look for trades in the opposite direction, so we can take advantage of this big move. And on this, confirmations depends on your trading plan. This is something that I'm not covering at the moment, but hopefully in the future and in the future videos that will be going on the channel. So we have these. So we have the uptrend, the push, and then we have the rejection. Now we need to look for confirmations to take sells. So you could use, let's change color, you could use this. So you could use, let's go on the 1H so it's clear. So you could use, no, I need red. Okay, so you could use this. So you could use the big bearish candle and the bullish candle. Why? Because this is something called engulfing candle. So basically what it means that because the bearish candle is bigger than the bullish candle, means that the trend should be going to the opposite direction. When the opposite happens, the trend should be going the opposite direction. So this is something that you would consider, look for, and then take the opposite direction trades. This is something very useful, especially if you're a beginner. You would always want to look for confirmations. So look at the high time frames, see what the trend is, switch to lower time frames, see what confirmations you can get, so that the trade you take is good enough, or good, so that you don't have to stress too much about, oh, this might happen, that might happen, and so on and so forth. So you need to have the confirmations that, okay, my trade is gonna be good, is gonna be solid, and I'm confident that it will go to the target I have. You would do the same here. So here, rejection, price, create a small consolidation, break above. You can see a minor retest, but it didn't touch the square itself, and then price shot up. That's another thing that you can consider: break and retests, fake outs, a lot of concepts that you could look up online and you can find. If you guys have any questions, so for me that will be it for this class. I think I covered all the topics in details and the way I wanted to. If you guys have any questions, you could leave them in the comments. I'll go over them and I'll read them, or you could just send me a message on Instagram. The tag name is going to be posted, is going to be on the YouTube channel. You could just shoot me a message and I'll answer you back as soon as possible, and it will be very appreciated if you guys like, comment, and subscribe, or share it with friends and show them that what we were working on here. Thank you guys, and we'll see you in the next video.